Hi everyone, I'm Matt from Looking into Bitcoin. Today we're going to be looking at how much Bitcoin should you be holding. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source of Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now here, we're just on the Look into Bitcoin site, specifically on the addresses holding at least X amount of Bitcoin per year. So here we can see addresses by holdings and their gradual increase in popularity over the past. So we can see addresses going down from 0.01 Bitcoin increasing at potentially millions a year up to 0.1 and then 1 Bitcoin, which recently just surpassed a million, but usually increases at a fairly steady rate of few tens to, if not a few hundreds of thousands per year. But ultimately today we're not going to be focusing specifically on the rate of adoption and the rate of accumulation by different addresses. We're going to be trying to answer a pretty difficult question, of course, in a very oversimplified and quick way of how much Bitcoin you really should actually be aiming to be accumulating. How much really should you be aiming to hold that will really try and set you up to a fairly good amount of upside potential without potentially being too overexposed? So many people have tried to answer this question in the past. How much Bitcoin should you hold? And a lot of them have been very specifically about weightings within a portfolio. This article by Forbes ultimately comes to the conclusion that most experts agree that crypto should make up around 5% of your portfolio. And there's an article here by Coindesk going over a pretty similar topic that eventually comes to the fact that a Yale study found that between 4 and 6%, so again, 5% of your portfolio should be allocated to cryptocurrencies. But this is a pretty vague figure, 5%. So what I've done, as I said, some very basic back of the envelope maths, try and actually put a number on how much this should be. So I'm taking some rough numbers. I'm going to assume that most of you watching this are American, or at least English speaking. I'm going to assume that most of you are male of around 38 years old. So again, we go here, median salary, US, 38 years old. Let's say beneath 60,000, about $50,500. Life expectancy, we're going to assume we're all going to live for a very long time. I'm not going to go country specific. We're all going to assume we're going to match or beat Hong Kong's average life expectancy of 85. Average savings for that age is somewhere between $11,500 and $28,000 instantly. That is about the price of Bitcoin right now. If a 40-year-old was to put all of their savings into one asset, maybe not the wisest decision, but something we should consider. So if we use all of these rough numbers, I've actually put these into a calculator. So initially what we'll look at is something like this, a portfolio optimization tool. And what I've done here is added in a number of different assets to try and maximize your returns within your portfolio. So what I've done here is say if we want to have no more than 20% volatility, and this volatility is usually classed as standard deviation, or probably drawdown is the more accurate way to say that. So if we try and maximize our returns limited to that, and here we've got a comparison of maximized Sharpe ratio. So this is the lowest amount of volatility possible compared to the returns. So here I've added in GBTC, which is going to be our Bitcoin equivalent. Here, VTSMX, whatever that is, it is the Vanguard Total Stock Market Index. The IEF, which is a Treasury bond comparison. Gold, and VGSIX, which is the Vanguard Real Estate Investment Index, or REIT if you'd prefer. So if we go down, I've actually already done these calculations. And what we can see is maximizing our returns at 20% volatility suggests a 10% allocation to a Grayscale Bitcoin trust. But very quickly, if we go into the Bitcoin chart that we can see here, we can see the Grayscale Bitcoin Investment Trust is actually doing terribly compared to the underlying price of Bitcoin, while Bitcoin over the past 5 or 6 years is up around 866%. The Grayscale Investment Trust is up under 30%. So this is an absolute worst case situation. Unfortunately, on this calculator, I couldn't actually get the price of Bitcoin for those returns. So if it's giving 10% to the Grayscale Bitcoin Investment Trust, maybe a little bit more of that, but we won't assume too much. And if you're maximizing your risk adjusted returns by the weight of the Sharpe ratio, then it again suggests a 6.5% allocation to the Grayscale Bitcoin Trust. But if we go down and just assume we're going with this 9.76%, we can see here that limiting to 20% volatility, we can see that we'd have averaged around 20% annual returns. So we're going to use that 20% annual figure. And again, we're very quick calculations here. These calculations are going to vary wildly compared to your individual needs and circumstances. So I'm just obviously taking some ballpark figures here, but we do need to take into consideration, like I said, that Grayscale the actual calculation we've used for this has been vastly underperforming the underlying price of Bitcoin. But if we go to something here like a retirement planning calculator, we can say that as a 38-year-old that you may be, let's say you want to retire at 55, because we all want to retire as early as possible, and your income is, like we said, about average, and you're saving about 15% of your income, and your current retirement savings is one whole Bitcoin, or a one whole Bitcoin equivalent. As we looked at the average savings by age, that was about the right amount. Expected income increase, I've just put this at the current rate of inflation. Pre-retirement income, again, we don't want to retire and have to be really strict on our savings. So we'll say 50% of what you're earning as a working adult we want to have every year as well. And let's say you want to last, like we said, till 85, or at least cover those years. And we're earning 20%. Once you've retired, well, maybe we'll have too much exposure to Bitcoin. So let's just say you marginally beat inflation. What we can see is as we go down here, we'll get to the age of 85 and still have $88,000 in the bank. What we can also do here is, a lot of you I know are already thinking, oh, but other crypto assets, maybe we'll have higher rates of returns, maybe I'll be able to diversify into Ethereum and other altcoins to actually maximize my returns. Well, what we can do here is, if I just hide that GBTC, if I just add in this ticker here, which is total 2, which is the entire crypto market cap excluding Bitcoin, we can see over the same time period here that there is an almost one-to-one correlation between Bitcoin and other cryptocurrencies. Obviously, there are some that are going to outperform, but the vast majority, unfortunately, do underperform, especially during the drawdowns. We could see maybe in the bull market, many will have outperformed Bitcoin to the upside, but then vastly underperformed to the downside. So, not necessarily a great idea diversifying into too much cryptocurrencies. What we can also say here is you don't necessarily have to buy all of your Bitcoin all at once. Here, I've just assumed you can put aside $500 a month and use this dollar cost averaging tool to say, if over the past 5 years you've managed to invest a little more than what we said previously at $27,500, by now, over the past 5 years, your investment would have actually doubled in value. So pretty much in line with that 20% return we discussed previously as well. So ultimately, what can we combine all of this to tell us? Well, if we're using the retirement calculator, and as I said, some very rough maths, do not take any of this as gospel, that potentially aiming for at least one Bitcoin should be your main focus. If you can get one Bitcoin, great. That's probably going to be a fairly decent amount to hold for the future. Obviously, as well, we're assuming a fairly steady rate of return in Bitcoin. Maybe if we can time those investments a little better using some look into Bitcoin tools, things will improve even more substantially. But really, if you can join the whole coiner club by accumulating one Bitcoin, that'll probably set you in the right direction. So just to summarize, each individual will have different needs, wants, and circumstances that weigh in on their goals. This is definitely not financial advice. This was a very rough, quick amount of calculations based on some very generic averages and some basic statistics we have to work on. But like we concluded previously, if you can become a whole coiner, either if you've already been in cryptocurrency for a long time and you're continuing to accumulate, or if you're just new into the space, accumulating one whole Bitcoin should definitely be the aim for most. Even if you are trying to venture out into different crypto assets, I think having that in the bank, in some cold storage, one whole Bitcoin that you can hold on to, and maybe occasionally distribute and take profits on as we get to overheated, over exuberant market conditions, and then maybe accumulate a little bit more as we get to the bottom using some look into Bitcoin tools and metrics, then I definitely think that is a great way to do it. And especially if you're diversifying, if you have a little bit of an investment portfolio into other assets as well, you don't necessarily have to rush into this. You don't have to think that I need to accumulate one Bitcoin immediately. Like we have shown with the dollar cost averaging tool as well, this is something that can be done over an incredibly long period of time and still have very effective results. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to get access to live chats, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. And let me know in the comments down below, are you a whole coiner yet, or are you just trying to accumulate that one Bitcoin to really kickstart your BTC and digital asset holdings? Are you trying to accumulate other altcoins and other cryptocurrencies because you believe they'll outperform Bitcoin? Whatever your thoughts and comments are, please let me know down below and on social media. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.